Thank you, thank you. Keep your seats, please, everybody. Hey, welcome to 2023. How awesome is that? We get to start out 2023 on one of my favorite days. It's called Transformation Tuesday, formerly known as Taco Tuesday. So, and it's perfect menu setup. I don't know if y'all planned that or not, but anyway, today we're going to be talking about, I was able to bring the entire Altra mortgage team with me today. So you're not just going to get to hear from me. I've only been here about a year. I've been in mortgage lending for about 5 years, but I've been in lending altogether since probably 2003. So we've seen a little bit of everything, right? Everything is all cyclical, right? Just kind of cycles through. But you're going to hear from Martha, you're going to hear from Lauren, you're going to hear from Pedro, and there's a wealth of knowledge. But today, to not take up too much of your time, I'm literally just going to start talking about how to add an extra closing or two to your portfolio. And truth be told, and be honest, how many could have used an extra closing or two in 2022? Right? An extra closing is worth what? 2, 3, 4, 5, 10 grand? That'll pay for some Christmas gifts. So today we're just going to talk about something really small, and it's a 1% down loan program that's unique and specific to Altra Federal Credit Union. Now, how many people in here are members of Altra Federal Credit Union? Really? Here we go. I got some goodies for you. One there, one there. So Altra Federal Credit Union, we've got 4 locations. I'm out of the Lindale branch. Martha, when we get to her, we'll talk about where she works out of, and Pedro and Lauren, all them. But I'm out of the Lindale branch. But we do lending pretty much all over Texas, Louisiana, Arkansas, Oklahoma. We're based out of Wisconsin. But how many know where all the offices for Altra are? Okay, so I'm at Lindale. We're right across the street from Brookshire's. The Tyler West branch is right off of Highway 155 and Loop 323. We've got the South Broadway branch where Tammy's out of, and it's right next to Starbucks on South Broadway in the Cumberland Village. We got Lauren off of Highway 110, right across from Train, and then Martha works the entire U.S. region. So that's not true. She works remotely. She's definitely earned that right. So, but as far as getting back to the 1% down program, what percentage of your business is first-time home buyers? Quite a bit. And how many of those have the 3.5% down? How many of them have closing costs? How many of them don't know what's going on? Right? That's a lot of what we get. And what I love about Altra is that we always take that consultative approach to really educate our borrowers. So when you get them, you have an idea of what's going on. And one of the things that we love about this first-time homebuyers program is that it's really 1% down. I was on the phone with an agent talking to him today, and he asked me, so if it's a $100,000 home, is it $10,000? I said, man, this guy catches on quick. It's easy math. Now, there are a couple specifics to it. There is a maximum loan volume or loan amount of $350,000. But first-time home buyers, how often do they go past that? Not very many, right? So 1% down, $350,000, $3,500. And it doesn't have to be their money. It could be gifted to them, right? Their parents or family, it could be gifted to them. It doesn't have to be their money. You also have, you can use seller concessions. Seller concessions can be used. So literally, if you have seller concessions, you've got money being gifted to them. I did have an instance in Palestine where they actually got their appraisal money back because they had put some of their earnest money down. And so they got money back at closing. That doesn't happen too often, but it can happen if the situation, is structured perfectly. So, but you got that. And then another thing is, they do have to be at least a 680 credit score, median credit score. So just to kind of give you an idea on how we do the loans is we take all 3 scores. We're not bureau specific. We take all 3 scores. We take out the high score, kick out the low score, and we use their median score, no matter which bureau it is. I'm doing a loan right now for a first-time home buyer. He's a 720. He has 1 line of credit. It's a $350 credit card that he's had for about 6 months. And we're already out of underwriting, and we're fixing to get his last few steps, and we're going to be able to get it clear to close. First-time home buyer, $350 line of credit, and we're fixing to get into a house. 1% down. Now he did have enough to cover his closing costs, but every situation is unique, so don't hesitate to reach out to any one of us, and we're going to have access to all of our contact information here shortly. But yeah, 1% down, $350 max loan amount, 680 credit score, and here's the real kicker. You ready? There's no private mortgage insurance on this loan. None. The rate is a little bit higher, but when we've compared the rate that's a little bit higher to the loan that's 3.5 down with PMI, it beats it hands down left and right. And so really for a first-time home buyer, you think they're concerned about what percentage of their payment is going to principal and interest and PMI? And, they're looking for what? Final payment. That's what it's all about too. Am I missing anything on first-time home buyer? 30-year fixed rate. That's right. Yep, conventional loan. Conventional loan, absolutely. Oh yes, 5-acre max. So if you do have a first-time home buyer looking for something, 5-acre max, $350,000 land loan or loan amount, and 1% down. And they can do more. I've had them do more, right? But I've actually got them to shift some of that money from the 1% down to the closing cost, because a lot of the first-time home buyers do not realize what it takes. They need a lawnmower. They need all these other things that they need so that they can shift their money. Questions? Today, I haven't checked them this morning.
We don't put that rate on the rate sheet.
Yeah.
It is credit score specific. So somebody with a 740 is going to get a better rate than somebody with a 710. Okay. So it is.
Mm-hmm. So is it an in-house loan? It's an in-house portfolio loan, and those are the really neat thing about us doing the in-house portfolio loans is that a lot of times we can go directly to the underwriter or to our supervisor and say, hey, look, I understand that they let this car go back last year, but what had happened was, no, I'm just kidding, not really. I understand the situation says this, but look at this compensating factor over here. And if we have enough of those and we can get that to line up, a lot of times we can push it through. You've got 3% down conventional, 6% seller concession. So I'm fixing to be passing this on to Ms. Martha. Martha's going to come to you and talk to you about a couple of the different loan programs that we offer.
Hello, I'm Martha Roy. I don't know, can everybody hear me okay? Well, it's good to see everybody. I do work remotely from my home in Longview, so I don't get to see everybody the way I used to, but it is good to be face-to-face with everybody when I get that opportunity. I'm going to talk about our adjustable rate mortgages, which before 2022, we didn't do them very often. We still had a call for them every now and then for specific situations, but in 2022, we really, I think, did a record amount of adjustable rate mortgages, just simply because of the rising rate environment that we experienced, which in my 30-year career, I had not seen anything like that. Interest rates going up so fast, so much, so fast. But we all survived it, so kudos to all of you for surviving that crazy market that we were in last year. I think if I didn't color my hair, I'd have a few more gray hairs because of last year. It was a challenging year, but it was a record year for me personally, and I'm so thankful. One of the reasons for my record year was because of all the outstanding programs that Altra offers. One of those are our adjustable rate mortgages with at least 3% down, minimum down payment. We can do PMI on those. There are circumstances where we can waive the PMI on those arms, depending on the credit score of the borrower, their situation. We do look at each borrower's situation. So another wonderful thing about Altra is we do have in-house underwriters, in-house managers that are willing to look at every single application. If there is an extenuating circumstance or a mitigating factor that we can use, they are certainly willing to consider that. Our adjustable rate mortgages, we can offer a 3-1, 5-1, 7-1, or a 10-1. And what that means is the first number is the number of years that the interest rate is fixed. For example, the 3-1, it's fixed for 3 years, and beginning year number 4, the interest rate could adjust depending on the index in year number 4. It could go up, could go down. It just depends on the index at that time. There are caps to the interest rate adjustment. Per adjustment, it's 2%, and there's a lifetime cap of 6%. So if your rate starts out at 5, The maximum that rate could ever increase over the life of the loan is 6% above that. So 11%, which sounds high, but when I got in this business, mortgage rates were 17%. It was a long time ago. So thankfully, they're not that yet. I don't think they'll ever get back up there, but the good thing about that was CD rates were high at that point too. But anyway, back to the ARMs. The 10-1 is a popular product. When the conforming loan amount, I think, was just raised to 726.2, something like that, as of January 1. So anything less than that, the 10-1, I think the rate for that today was 6 1/4. Is that right? If it's a jumbo, so if it's over the conforming loan amount, we can give a 1/4 point break on that, so it would be 5.75. So that interest rate is fixed for 10 years, and then it can adjust. Hey, Roscoe. Hey, darling. And then it can adjust year number 11. So that's a very popular product that we have for the conforming loan amount and also for the jumbos. So interest rates today on those with at least a 720 score, 5.625 for the 3-1, 575 for the 5-1, just kind of goes up from there. So any questions on the ARMs? We did a ton of them last year. I think we keep all of our condo loans in-house now. Fannie made some adjustments to their condo program a year or so ago after the condo collapsed in Florida. So we keep all of our condo loans in-house. We do have options for a 30-year fix for condos. So we do have to look at each project to make sure that we have to get their insurance. I think we have to get the insurance for the condo association. Yep. All right.
All right, Ms. Lauren.
Hi, everyone. I'm Lauren Malone. I work at the Troop Highway location across from Train. That used to be the oldest location, but we now have a new, nice building, so the wallpaper isn't falling off the walls anymore. Y'all can come see me. I do the bulk of my lending in construction loans. Back in 2020, I personally built, so if there is anyone that understands how crazy building is right now, it is me. We have recently spread our construction loans out to 12 months. So you have 12 months to complete the home, and then the last month, which would be the 13th month, that would be whenever you need to, go into your permanent financing. We do have a super low construction rate. It's at $399 right now with 720 or higher on credit. We only go up to 1.5 on construction. 1.5 sounds good. So I know that we can for sure do 1.5. A lot of things have been changing, in the construction world recently. We have seen, some things come down. There is a lot of, builder concessions. If you purchase the lot, you get, certain credits towards certain things. But really and truly, we have a huge list of approved builders with us, and also we are welcoming new builders. All it is just a reference page that you have to fill out. We go directly with our land loan product, which Pedro will be talking about. We have super low rates on those too. We can do land and construction closings at the same time. So whenever you purchase your land, you can actually start construction the next day. So those really kind of go hand in hand, and we close those here at a local law firm that represents us. So you don't even have to go to the title company. Is there any questions on construction? I know that y'all probably don't do a lot of that, obviously, but
we do actually.
Good.
Is it a one-time close?
No.
Okay, so it's two closes.
Yes, so you would close on your construction, and then once the home is complete, we would do another appraisal, and then we would do the perm financing.
Can you lock that rate in?
Well, it needs to be 90% complete as of right now, so as close as possible. But, I mean, it does depend on, we can lock up to 90 days out. So, things happen. Some people say, oh, I'm 90% complete, and it's 3 months later, and they're still not in their house. So things do happen. Most of the time, we just lock on 60-day, but we do offer a 90-day lock for a little bit extra on the rate. Anything else, anybody? Okay, Pedro is going to talk about land loans.
Hey, can y'all hear me? I'm Pedro Ramirez. I'm right here at the Tyler West location, right down the street. So our land loans, so we do offer a 3-year balloon on land loans if you plan on building on it. So the loan is structured as a 30-year mortgage, and then as long as you build within 3 years, you can just roll it into your construction loan. The rate on that starts out at 3.99 with 10% down. If you plan to buy and you don't really know when you're going to build, we do offer a 15-year fixed with 20% down, and the rate on that is a variable rate, so it varies on the market. 20% down on the recreational loan. And the recreational loan is a 3-year or a 5-year balloon. So it works the same way, structured as a 30-year. I think that's about it. Any questions? Yes, ma'am.
The 3-year at 3.9,
Mm-hmm.
that's amazing, actually.
Yes, it is.
And
So,
the question, I guess, is what if they decided not to build it and they pay it off in 3 years?
as long as
3 years and pay.
as long as it's paid off or refinanced within the 3 years.
Prerequisite when you do the loan that you have to do a loan?
There's not, but you have to be planning on building on it. So it has to be your intentions to build, and the max loan amount is at $250,000. Yeah. Back to Johnny. All right, perfect. Yeah. So, in their defense, and they're probably going to kill me afterwards, I'm like, hey guys, I got a great idea. Y'all want to go to the Success Center? And so we're in the back corner, they're like, what do I talk about? I'm like, land loans. But the neat thing about Altra, and one of the reasons I partnered with them back at the start of 2022, was because of the flexibility that we have. And whether you're looking at a land loan, whether you're looking at a new construction loan, whether you're looking at a first-time home buyer, or whatever the situation may call for you, it's an extra closing every month. And regardless of what the loan volume consists of, it's more money in your pocket, because at the end of the day, right, my mentor, my coach always taught me that people tune into one station. Anybody know what that is? WIIFM. Anybody know what that stands for? What's in it for me? So what's in it for me? And you think about that when you're talking to your borrowers, when you're talking to your buyers, if you listen, right, 2 ears, 1 mouth, a lot of people have a tendency to listen with their ears, but the truth be told, you listen with your heart, and you help them solve a problem that they have, a housing problem. Whenever they sit down and do a mortgage strategy session with me, I'm asking all kinds of questions, because if you will slow down in the beginning of your meet and greet, and I do this with all my mortgage borrowers, I find out why. Why do they want to be a home buyer right now in this economy? I don't tell them otherwise, because they don't know a good economy. They don't know a bad economy. They know a I want a house right now economy. And so that's what I focus on at that given point, because they don't know that they could have bought a house at 2-3% 2-3 years ago. They don't know that. They just know they're tired of paying $1,500, $1,600 a month in rent. And when you're tired of something, you'll look for a solution. And really, as a real estate agent, as a loan officers, we're just problem solvers. The bigger the problem, the bigger the paycheck. So just think about that. The bigger the problem you solve, the bigger the paycheck you get. And I think so many of us are just shortcutting ourselves out of the greater portion of our compensation by not taking the time to ask those difficult questions. Because whenever the buying, and I'm kind of getting into it, I'm going to talk to you next time I'm here, but whenever the buying process starts fading out, what happens? I'm sure you guys we've had some borrowers that were like, I wonder what happened to them. Where did they go? I'm going through my pipeline, I'm seeing all this red, I'm seeing all this pink, I'm like, where did they go? I call them back up, and, oh, well, we just decided to put it on hold. Well, that would have been nice to know. You know, I'm over here trying to follow up, send an email, and I'm sure I think the term is called ghosted. Yeah, I found that out the hard way. Okay, I'm like, where are you? Who's going to forget about me? Why wouldn't you want to use me? But that's just the whole thing. But as long as you have an answer for them, and we're not naive enough to think that we're the only lenders up here. That's why you see a bank right next to every church, right next to every restaurant, right next to, and not necessarily in that order. But that's what happens, is that there's so many lenders, there's so many programs out there. We don't want to be your only lender. We know we can't be your only lender, but we would like to be your preferred lender. We would like to have that lender that has that relationship with you, that you can call us and say, hey, I've got a situation. Hey, I've got a borrower. Hey, here's where we're at. What do you think? Let's talk about it. Let's talk about it. And together, right, we can all come together and, two heads are better than one. And what's better than two heads? Three, right? John Maxwell said that it's a bunch of people getting together, putting a bunch of good ideas together to come out with he called it a God idea. And sometimes you need spiritual intervention to put some of these deals together, right? But but that's what happens so many times. But we are just simply offering you another avenue that you can share with your borrowers, share with your buyers. Hey, I know a guy. I know a gal. Let me put you in contact with them. So it doesn't have to be me. It could be any one of us. And we want to be able to add those extra closings to your bottom line every month, every week, every quarter. Because even if we only do one every quarter, that's 4 extra. How many quarters in a year? Do y'all know that? That's 4 more. I ask these really hard questions. But that's 4 closings every year that you didn't have prior, just simply because you picked up the phone and said, hey, I got a situation. It's okay to say I don't know what to do with this guy. Don't share this with too many people. I've sent people to other lenders because I couldn't do it. Just because I couldn't do it doesn't mean they don't deserve a home. I might miss them this go around, but guess what? I'll catch them on the next one, and the following one, and the following one. Right now, all I'm doing is building a relationship with my borrowers to the point that they don't just get one loan from me. They get all their loans from me, from Altra. And then guess what? They have friends and family that they hang around with. Hey, Johnny, Martha, Pedro, Lauren, Tammy, they helped me get a loan. Why don't you go talk to them? And that's how we do a bulk of loans through Altra. I mean, just myself, I closed a little bit under $22 million last year, which is okay for not having originated for January, February, March. Lauren, Martha, Tammy, put all that together. You've got multiple years of experience, multiple millions of dollars of closings, and we've probably seen every scenario. Well, maybe, I don't know. There's been some come up recently that we're like, I don't know. But your chances are better just because you have a group of people working together. Because when I don't know an answer, who do I chat? Martha, Tammy, hey, Lauren, when I have a construction loan, hey, when I have a land loan, hey, Pedro. And Pedro's our newest mortgage originator. He's been with Altra for 5 years. 5 years, but this is his first year as a mortgage originator. So he's new, and he's catching on super fast. Definitely going to be an awesome mortgage lender. So anyway, questions, comments, concerns, snide remarks?
Question. I know like credit unions have different rules and stuff than regular banks do. Do our clients have to be a member of Altra to come to y'all for a loan?
No. Not at the application time. During the application, before we fund, they will open up an account and become a member. And you only have to have $10 to open up a savings account, and that's what establishes your membership. But let me tell you something really cool about this. And only because I recently had this happen. I had a guy come in. He didn't qualify for a home loan. He had some really high auto payments. He had some really high debt. He had some money down. We paid off some of his credit cards. We went with the first-time homebuyer program. We refinanced his auto loans. We shifted some stuff around, right? And we got him to just under that threshold that we needed to be at. Because this might not be important to you, but we do need to be at a 43% debt-to-income ratio on a first-time home buyer to be able to get them qualified for it. That's what the guideline says. Right? Guidelines are guidelines. Yes. Yes, if you don't know, I was in a hurry to get here early to set up, and one of Tyler's finest wanted to get my autograph to start his 2023 year out great. So I told him, Happy New Year, Bob. I think his name was, anyway, but it doesn't matter. So I kickstarted his 2023 quota, so I'm excited for him. But even in the speeding ticket, right, whatever, but a guideline is just that, a guideline. And what I love about our underwriters is that I know I'm at 48%. I know I'm at this, but here's the situation. And we were able to put that deal together. So that's what I love about credit unions, or that's what I love about Altra in general. So anyway, what else?
Hey, John, I want to give an example of a loan that I'm closing this Friday. It was from a borrower who was referred to us by her brother. I made his mortgage loan several years ago. She was recently widowed, and because of several $1,000s in medical collections that her late husband left because of his illness, her credit score was high 400s. Normally, I would have immediately declined it and moved on. But because her brother was a member and I heard her story, I took it to my manager, I took it to my underwriting manager. They said, okay, if we can get this, this, and this, we can do it. And we did it, and we're closing it Friday. So that's the kind of situation that we will consider, we will look at for each borrower. We are here to help people become homeowners. So just a situation like that.
Yeah, and I mean, every one of us probably has a story similar to that, where we went to our underwriters, and our underwriters are not black and white, you know, hey, the rule says this. I mean, they did tell me, hey, guideline says this, but again, guidelines like the speed limit, suggestions, right? 59 and a 45, that's the dumbest thing I've ever heard. But anyway, old Jacksonville, who knew? Anyway, but truth be told, you know, at the end of the day, all we want to do is help you guys get another borrower closed, because more closings equals more funding, right? We're trying to stimulate the economy. We're change their lives by helping them. Our tagline with Altra, if you don't know this, it's helping our members live their best life. Helping our members live their best life. And a lot of that starts with home ownership. And I can't tell you how many people started their first home, and that first home became their investment property. And all of a sudden, we start doing loan after loan after loan after loan. So anyway, that's all I got. Hey, thank you to the Altra team for coming in the clutch, even when you didn't know. Thank you for putting up with me. And questions? Anybody else? All right, Cindy, that's a wrap.
Y'all give him a big hand. Thank you, ladies and guys, for coming today. Thank you so much, guys. We thank you for being here. Again, we have a big training schedule for this month. We hope you will join us again. And just what he just said about home buyers and home sellers, we at the Success Center feel the same way about you as the agent. We don't want to just help you sell a few houses here and there. We want to help you change your life, because real estate can change your life. How many of you have had your lives changed with real estate? I know I have. I have had my life changed with real estate. And so I was talking to somebody that thought about going and maybe getting a job. And I told her, I said, you know, I can't imagine going and working for someone else, punching a clock for someone else. And, you know, as we move into this 2023, some of you are new in the business. Some of you have only been in the business for less than 5 years. We're moving into a different market. And the market is going to be very precise. You as an agent are going to have to be very strategic in what you're doing moving forward by getting your buyers and your sellers. If you've been selling real estate the last 3 or 4 years, the buyers and sellers have just come. They've just come by the droves. And now we're actually going to have to start showing our skill level, and we're going to have to start learning how to prospect, keeping our databases. I was on the phone with a young lady this morning that's had her license for 2 years. This is her 3rd year. This year, she already feels, last year, she started feeling the feeling that it was different because she had a blowout year. She did a third this last year of what she did the year prior. And now this year, she's going, what am I going to do? How am I going to do this? Well, your skill level is going to have to improve. And that's what we're doing here at the Success Center. We're training agents on skill, on how to sell and how to make it a great year in 2023. We thank you for coming today. Plug into what we're doing. Please eat some more tacos before you leave here. We have a lot back there. So y'all have a great day.